All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I hope you're having a fantastic holiday season here, and wish you all happy New Year. Last day of 2019 today, and heading into the next decade here tomorrow. So exciting stuff! Exciting stuff. Market full trading day here today. It's not a half day. It's one of those where some people think, yeah, it should be a half day, but it's not. It is a full day, at the end of the year. And one of those where there are some tendencies, right? There are some tendencies, but like any tendency, it's nothing that, you go out and blindly, expect and trade. You need to wait for the setups, to come into play. So let's go out. I'm going to spend about the next 30, 45 minutes here. See if we get some day trades. I'll show you some of the stuff that I'm looking at. I am in one trade right now, and I'll show that to you here. And then, anything new that sets up, I'll go jump into here while on video. The new challenge will kick off on the 2nd, so on Thursday, and it'll be in the afternoon session. I won't be on video in the morning. Gonna just let the new year open, and then see where things are in the afternoon, and go from there. We'll have the new spreadsheet and everything ready to go here for that. So looking forward to that here on Thursday. And so let's go get to it. Let's start with the trade that I'm in, and I'll show you that. We got a signal here on the. Let me get the 15-second here. We got a signal here on the 1 minute chart of the S&P or the SPY here on this minute right here. And the market went from from green to red. Wasn't the first time that it had done that here today, but it made this dip, and we saw the stochastics move below 80 on that move, and then the Bollinger Band width in a good spot. And got a nice little signal, so I went out and bought it. Just after I got in, the S&P shot up about a point, or the SPY shot up about 10 cents there. Not too uncommon when there's a little more chop. And let's face it, today the chop's pretty low. It's not very high. But then, it started to roll on down. I do have a stop order in it to automatically fill me at 320.32. So 320.32 is right here. And my non-straight line there looks like we haven't hit it yet. So, if that hits, it will stop me. It will stop me out there. So, we'll see kind of how that plays on out. But that's the only signal that has come in here this morning. We did just get a move above. Above 20 here on the stochastics, just a little bit before I got on video. But it happened as the Bollinger Band width was on the rise. So not a signal, not something to go out and take advantage of. And we can see right now the stochastics is pretty much in the middle. So, we need to see a move up here or move down here to get a signal to come into play, or a possible signal to come into play. So we're probably, a few minutes, 10, 15, 20 minutes out of that possibility here with it. We did see a few upside moves on the stochastics above 20 here this morning, right? But all three of them, right? Just the one we talked about, but all three of them have something in common. The Bollinger Band width was on the rise when it happened. And that's just not an upside signal that's trustworthy. To me, this is one of the best filters for a stochastics if you're playing a stochastics method here. And, it keeps you out of a lot of trouble there. And so far, that's what we have, seen come into play. All right, so that's the market on the 1 minute. If we come into the 5 minute, there haven't been any signals. Let me show you what it looks like. We haven't had anything happen really. I mean, we had the first 15 20 minutes. Yeah, moved down on the stochastics, but not a signal there. Now we're below 20 on the stochastics. Bollinger Bandwidth has really risen. We could see a signal if we see the Bollinger Bandwidth start to decline in a move back up above 20. We could see a signal come in on the 5-minute chart. Probably not going to happen within the next 10 minutes, but that possibility is there. Now, as far as today goes, right, there are a few things I'm keeping an eye on. Number one are the observation techniques. So broken overnight range, high volume, 20K volume come in, and we haven't seen either of those here today, right? We don't really have a good overnight range. Last night, this is where the market closed, right? And its highs up here during the Asian session. But then when the market opened, it opened at its overnight lows. So our lows are down here. So that's our range here for the market. The market, opened up, shot up here, pretty swiftly. And just something where, okay, we don't have what we had, the night before with that tight range that got broken. So nothing for me to really, nothing that sets up for me that I say, oh, well, if this happens or that happens, I want in. No, it's just one of those where it just not a very good setup today. Will we get 20K volume? So far, no, right? First few minutes don't count, they never do. In fact, it needs to give us 30 minutes before, we see that. But we haven't seen a big, push one way or the other with that 20K volume element come in, here just yet. So nothing there. We're not at the first of a month. Do we have an event range, right? This is an interesting one today because we don't have an event. In the traditional event, mentality, but we do have an interesting range here on the market in a very fast, quick way that happened within 20 minutes on the last trading day of the year. Typically a time where traders want to go home. Does this range matter? Are algorithms keying off of this range? Meaning if we break the downside, are the algorithm's going to key in and sell aggressively? And if we break the upside, are algorithms going to key in and buy aggressively? The way that I'm looking at it is I don't think the upside means anything. I don't think it's something where algorithms are going to step in and buy aggressively if that level breaks. I do think there is a possibility that should the downside area break, we may see some algorithms kick in and sell it. But I'm not, sold on either one here. So we kind of have this, quasi event, just something that, it's not the Fed, it's not a jobs report, it's not, a big piece of data. But given the time of year, we could kind of look at it that way. So, I'm not pinning anything off of it, but I know it exists. And, if we start to see some action with the range breaking, then, I'll pay attention to it. Now, one thing that the range does do is tell me that, hey, there's a pretty decent chance that we spend most of the day within this range. And you'll notice that since the range was set, that the market has stayed within that range. And that, to me, suggests what? That suggests that, man, I may not have a ton of movement to take advantage of, right? And that's not what I want to see. I want to see, some movement to be able to take advantage of. It's not all knowing or all saying here. It doesn't tell me how pack up, go home. We still could have, some nice movement, but it does tell me some of that movement could be limited, meaning we're not going to get this 20, 30, 40-point move. We may be limited, within this range and just kind of knock it back and forth in a 5 to 7-point range most of the day. What does that tell me from an option trading standpoint? That tells me that if I'm going to go day trade an option, I need to get more than a couple points for my option value to really appreciate, in any significant way. So I need to be, I need to make sure that I'm comfortable with the signal and that I'm either trading the stock so that I don't have to worry about any time decay, or I'm trading an option where holding it for just a little bit isn't going to decay away in a big way. Kind of like I did yesterday, right? Yeah, there wasn't any real time decay in that, so wasn't a big issue. So anyway, that's what that tells me. And then the last observation technique here, end of year sells, right? It's not uncommon to see some hard sells into the end of the year and into the last trading day. Now, a lot of these, historically have happened in tech. So what does that mean? Well, that means that I'm looking and watching tech, and there are 5 stocks on my radar. Intel is one of them that's on my radar. Amazon, the Qs, right? Which is just kind of the tech ETF, and I know there are more things than just tech in it. But Microsoft and Facebook, right? These are ones that are on my radar going into the close here today. Amazon and Facebook are the two that I've used in the past the most, and I will be looking for an opportunity to set up a put position on them here today, where I can buy the position and I can set an order to sell at the close, right? I do not want to hold these over New Year's. I don't, this isn't something where I'm looking at them and saying, man, these are bearish going into next year. Not at all. These are things that, when we see that end of year sell come in, they can sell off pretty sharply. The options can appreciate in value pretty nicely. So these are the ones I'm watching. Now, for right now, I'm only looking at the, at the chart. And I have the 5-minute day trade chart up here for me with the stochastics and Bollinger Band width, and saying, all right, do I get a signal? And so far, Facebook, no signal here today. We've spent, all day in between 80 and 20. So, there's no signal, in play. Here's Amazon. No real signal in play. We did have a move up above 20 here just shortly after I got on video. But Bollinger Bandwidth, very high. It did start to come down a little bit, but still very high on that move. So not something I want to be a buyer of there with that. Qs, just nothing here yet, right? But these are things that if we get a signal on them today, I will look to set up a put position on them. I'm willing to trade them to the upside if it's a nice signal. So far, we haven't seen one come into play on them. But if we do, I will look to take advantage of that. But I would like to see maybe they rally a little bit, give me a downside signal, and I can take advantage of that downside signal. And you'll notice I'm using the 5-minute chart on them, just because they're individual stocks. Yeah, I could use the 1-minute chart, but that's not. I'm looking for something that's that's a little more trend driven, a little more probability of a bigger move, not just a smaller knockabout move like like the SPY, and that I'm happy with there with the SPY. So that's those are what I'm watching, what I'm looking for here. Here on the SPY, you can see we've popped back above 80. We had a dip here below. But no real move in the Bollinger Band width to create a sell signal there. So we're just kind of in kind of no man's land right now with it, and waiting for another signal to come into play here on that. All right. So hopefully I've set up kind of what I'm looking for, what I'm expecting here throughout the day. Now, I do have an eye on the TLT. The TLT has had some movement here today. And you'll notice this looks different than the market. What do I mean? Well, we had the market, kind of shoot up at the open, and the TLT shot down on the open. But notice the TLT is now trading at a new high for the day when the market isn't trading at a new low for the day. We see kind of this outperformance in the TLT here, from a from an opening bell standpoint, not from a how much is it up today or down today or anything like that, but just from an opening bell standpoint. So there is a little safety flow that's happening right here, which does give a little bit of credence to some of my bearishness. But something I do have an eye on, looking for an entry point here. I have not had an upside entry point here for the TLT since I've been watching. We did have a move above 20 right back here just shortly after the market, about a half hour after the market opened. But I was not paying close attention to it at the time. And it's something that I've been watching here since, but have not seen any kind of signal. We did almost get below 20 to where we could get a signal, but just simply haven't. Something I have an eye on, but really isn't in play as it sits right here, right now. Okay. So the only signal, still that I'm running with right now is the one that I got right here. Still holding that, and I have an automatic stop in for 320.32, and we'll see if that fills. And if that fills, great, But it doesn't affect anything that I do from from here out. Okay. Alrighty. So let's give this just a little bit of time, a little bit of time to play out and to kind of do its thing as we go into the new year, right? Obviously, we have the 100K challenge. We're going to be running that. I'll talk more about the details of that. I'm not making a lot of changes to it. Running with the algorithm and with the methodology that we established, this year. But if you go to the front pages of any kind of news site in the market, there's a lot of stuff like this. Strategist on how we should rebalance portfolio after cashing in 2019 gains. There was a thing from Wells Fargo here today. I don't see it on here anymore, but Wells Fargo said, expect a correction and some chop and then a year-end rally and all of that, right? And so you have these big analysts and big broker houses coming out with their 2020 predictions. They all do it, and I do believe they all hate it. It's one of those things where you will see them change their predictions quite often throughout the course of a year. It's not like Wells Fargo is going to sit on that prediction and believe in that prediction the entire year. No, they will react, and as things change, they're going to change what they think. They're going to change what they put out. But they know, all right, our clients, they want a prediction, right? And while Wells Fargo may not be in the prediction business, right, they have to come out and give something, right? So they come out and they give something. They say, hey, this is what we expect. And it's all different, right? It's always very different what different analysts, their opinions are and everything else. But it's opinion season, right? It's opinion season. As the markets open up for the new year, opinion season's over. Opinion season goes out the window. We will not see nearly as much of that, opinion stuff of, hey, this is what's going to happen in 2020. Opinion season goes out the window. We tend to hear less. We tend to see, analysts talk less. We tend to see them predict less. And they're all eyeing what? They're all eyeballing the next earnings season. And that's what this market is about to embark on, is the next earnings season, which will kick off here in January. Now, this next earnings season, sorry, I was just checking to see if we were close to a signal, and no, we're not. But this next earnings season is a marathon season, right? It is one where it just lasts forever, right? It just lasts forever. So Wednesday, January 8th, right? We'll hear from Bed Bath & Beyond. We'll hear from Walgreens, Lennar, right? A few, right? Just some of the early stuff. We'll hear from KB Home after that. So nothing too serious the second week of January. As we get into the third week of January, right? Now, January 14th, that's when we have JP Morgan, Wells Fargo, Citigroup, Delta, United, where we have the official start of earnings season, right? Where that start comes into play. But it goes on forever, right? You can see 17 earnings a week later, 33. We're not really ramping up in earnings, right? We're not seeing that big jump to where we get 100 earnings a day coming out. The next week, we'll have Netflix, IBM, Halliburton, UTX, right? We have some big names, but we don't have the masses reporting. So we're 2 weeks in. Now we're 3 weeks in. Look, 53, 72, 92. Some earnings seasons, this ramps up to 150, 200, and 250, right? What's happening? These earnings are getting drawn out. We then have a week in February. We're now 4 weeks into it. 3 weeks into it, and we finally have a 141 on February 6th, right? 141 companies reporting on February 6th, Twitter, Grubhub. You'll notice not a lot of huge names in here, but a lot of companies. Then we get into the second week of February, 30, 42, 70, 95. But we still have a lot of earnings. Then we're in the third week of February, 55, 82, 133. We're now well over a month into earnings season. This earnings season that's typically about 3.5 weeks, and it just keeps on going, right? And here we are with Baidu and Domino's and some others, but it just keeps on going. It keeps on going here. Then we get into the end of February, and here we are, February 26th, 101 earnings. February 27th, 132 earnings. It is an absolute marathon season that doesn't conclude until pretty much the first week of March. So it's about a 6 week. Instead of 3.5 weeks, it's about a 6 week earnings season. And it's one of those that we see, we see a tendency with it. Okay. Just checking back on the chart. You can see no move above 80, no move below 20 to create any sort of signal here for us. Bollinger Band width is very low, which suggests we could see a flatter period come in, but we'll see how that plays out. But this marathon earnings season, what happens? Well, when we get into the beginning of the year, right, we know there can be some big moves. And I'm just bringing up a chart of the Dow, right? And here we have last year. And what happened? Well, the first earnings looked pretty good. They looked pretty good. And so what was the tone for the rest of the earnings season? It was rally mode. It was rally mode the rest of the earnings season. Now, we didn't really see rally happen again, until kind of near the end of the year, right? We went through this kind of long, flat period, a little bit of rally in the summer, followed by a drop. But, we were pretty much sitting at the same level, this kind of end of February level. Market was at the same level at the beginning of October, right? So it was one of those where we saw many of the gains for the year come in early, right? In past years, let's just kind of go back another year here. Let's go back to 2018. And let's just go, we'll go 2017. That way we get into the November 2018, 12/31. There we go. All right. This past year, what did we see? Well, we saw the early earnings season come in. We saw the market continue to rally. And then the market just ran out of gas. And we saw a big, hard, sharp sell. This is what I think is the risk factor for the market going into this coming year. And I know it's easy to say, market's up, it's got to go down. And that's not why I say that, right? But when we look at where things are positioned, right? If earnings come out to where there's going to be good growth in 2020 and the growth expectations increase, we're going to have things play out a lot closer to 2019 than 2018. But if there is any hole in earnings, or we start to see the early earnings start to show maybe a little deceleration in earnings, we're going to see this kind of 2018 element come into play, where we're going to hit some fear days, where the market's just going to become a little terrified of what could happen, right? Remember, next year we're heading into an election year in the U.S. That's going to create some waves later on in the year, but early in the year, not as much. But the earnings are going to matter, and what the earnings look like in the first 2 weeks, kind of that beginning, that end of January period, are going to be the driver for what happens in February, March, April. And that's where we're going to see all the predictors come out and change their predictions for the year. Right? They're going to let the first couple of weeks of January play out. We're going to see what the earnings are, that end of January. By the end of January, we will have enough earnings that we will know what the overall earnings scenario is going to be. And that is when we are going to see the analyst houses come out and update their predictions, repredict, revise what they said, here into the end of the year. And it's what we see play out almost every single year, right? But the earnings here, they have a huge factor in this market, because if you look at the headline factors, right? You look at what the market's expecting from the headline factors. What do we have? Well, we have the Trump impeachment proceedings, right? Which I don't follow super closely, but I have to have an eye on it just because it could affect the markets ultimately. But what is the market saying about the impeachment proceedings? It's nothing, right? It's basically the market has said it's nothing. It's not going to matter. And, so the market right now is not paying attention to it, right? Or reacting to it, I should say. Paying attention, just not reacting. What about Brexit? Now, market's paying attention, not really reacting, right? Markets had Brexit weariness for years now, and it's just one of those things where something new would have to happen in both those arenas to make the market react. So a big catalyst in one of those arenas. What about trade talks between the U.S. and China? Well, let's face it. Deal 1 is done. It was watered down. It was as kind of nominal as it could be. Are the bears going to be wanting to sell any worries of trade news? No, they're not. Right? Are the bulls wanting to buy any more trade news? Probably not. Right? That trade news stuff, we're probably going to hear it quiet down in terms of not necessarily in the media. Right? The media will still report everything that's going on. We'll see the tweets and all of that. But the market reaction to it all is likely to diminish, throughout 2020, right? President Trump has the election to worry about. China has their own stuff going on they have to worry about. And yeah, there will be talks and they'll try to come to a full-on trade deal, but this could be another 5-year process to get a full deal, right? So, not a lot of ripples, not a lot of waves there. So we look and we go, okay, of those major factors, not a lot in them, right? Not a lot in them. They've all been with the market for a very long time. And we know that the longer they are with the market, the less the market reacts. So what does the market have? From a news standpoint, it's looking for something new, right? And so far, there's not something new. And so if something new comes out, right, then there will be, a reaction. Let's just say, a war erupts. Let's say Russia decides to, fully take over Ukraine or something, just one of those types of things, where you have, tensions between Afghanistan and Pakistan increase, right? There are a million things we could speculate on, but nothing new for the market. The market, if it's going to make a big move based on the news headlines, it needs something very new to it. So what does the market have to sink its teeth into? Well, the same thing that it always goes back to: earnings and economic data. Earnings and data, earnings and data. And so the January earnings and data, uh, you know, perhaps more than other times, is just simply going to matter more because there isn't much more for the markets. And so they always go back to that element of earnings and data. And so as we see the new data come out, we'll see the new data come out Thursday and Friday. We'll have a little bit of a different schedule than most beginnings of months because of the holiday, New Year's and everything. But if we come down and we look at the economic calendar, you can see here that on Thursday we're going to have the PMI manufacturing index here in the U.S., right? Not the ISM, but the PMI. We'll have the Fed minutes that were supposed to come out Wednesday, but they were pushed to Thursday for the holiday. I don't expect much reaction from that. But then on Friday, we'll have the ISM manufacturing index that'll come out. You'll notice there's no jobs report this Friday. The jobs report's going to be pushed back a week. So a lot of the data is going to kind of, we'll see a little bit this week, but most of it next week. Coming out, and then we land into earnings season. So that's what the markets are going to have. Those earnings and data elements are simply going to matter more than what they have of late. And so anyway, those are, to me, those are going to be the bigger focus points and the the bigger the bigger reaction points. Now that also means something from a day trader standpoint. It means that you kind of have another situation, right? Another observation technique here. And that is upgrades and downgrades. Because on most days, there's not going to be a lot of news. There's not going to be a lot of new information. And so the information that's going to be out there for market participants to react to comes down to upgrades and downgrades. And so what goes on with that? Well, when the market is much more focused on trade news or other headlines, right? Upgrades and downgrades matter, and they'll make the stock go one way or the other. But it's one where the magnitude of moves can be a little bit smaller. When the market doesn't have a lot to sink their teeth into, the upgrades and downgrades list are where a lot of traders go to say, look, I'm looking for a move. I need a move. Give me a move. And so this is a list that can turn into a nice little day trade list. When some of the not the biggest names, but bigger names are upgraded. And what do I mean? Not the Apples of the world. Right? Not the Apples of the world, but the Adobes of the world. Not the Intels of the world, but the Microns of the world. Right? Just that next step down in terms of market cap and size of company. They tend to get bigger moves. They tend to have the big kind of Marubozu candles. What do I mean by that? Well, a downgrade, they tend to have an open right here. And then they tend to trade on down, and they close significantly lower than the open. On an upgrade, just the opposite. They open, it's going to be a gap, but they tend to close significantly higher than where they opened. And so those Marubozu, candles can be traded. You can expect more movement, more push in them. So from a day trade standpoint, that is the upgrade downgrade list is a really good list to go take a look at early in the morning to say, all right, do we have something that's catching the market a little bit off guard here to go and take advantage of. That's something from a day trader standpoint going into the next 2 weeks. I think it's going to be a very nice list and something that it's never easy to make money, but significantly easier to react to and to end a trade. Okay. All right. We see the market bleeding on down here. Looks like it's getting down to this 320, 32 level almost. Looks like a penny away. So my trade is probably closing. Yeah, 320.32. So yeah, it closed my trade. And yeah, so we had a nice little signal right here on the downside. And then, close right here. You'll notice how long was the trade open? Well, a little over an hour, right? A little over an hour, which is very, normal for me from a day trade standpoint. I just I don't day trade in the way that some day trade where I'm in on this minute and I'm out 3 minutes later. That's just not something that I've done very much of or have had much success with when I have done it. But where do things set up now? Well, we're right back here near this reaction range low, right, where the market opened. And we have the stochastics down here below 20. So we could see a bullish signal start to emerge. But we do have a problem in this minute. Well, the Bollinger Bandwidth is on the rise, right? So right now we're starting to push above 20. We have the Bollinger Band on the rise. So this right here, not a signal, right? Not a signal here as it sits. But if we get a little play around, right? We get a little play around here for a few minutes. We could see a signal come in. I will give it here just a few minutes. Let me show you what the 5-minute chart looks like here on the SPY. And you can see nothing here, right? We didn't get a bull signal on the upside move, right? You can see, though, we finally had the Bollinger Bandwidth on the decline. So if we see the stochastics start to move back above 20, with the Bollinger Bandwidth continuing to decline, we could see a bullish signal come in on the 5-minute chart. Right, so we're near the lows, the overnight lows, and some of the short-term charts are getting kind of close to potentially setting a bullish signal, right? Which is not uncommon to see. I'm just gonna take a look at the tech names that I want to be involved in, or I'm looking to be involved in. Here's Intel, nothing there, for me to go and short it. It looks like I mean not a great bullish signal a few minutes ago, but here's Amazon, right? No real signal in that. The Qs, no real signal here. Microsoft, and then Facebook. So, I do need to see some rally in these, a Facebook rally to be able to go and short it. But, as the day goes along, I'll have my eye on these, and if I get a bearish signal on the 5-minute chart, then what I will do is I will set up an option, right? So for instance, on Facebook, I'll show you kind of what I'm looking at. But I'll come into the options, and I'm just looking at this week's options, and I'm just going to take a look at the put side, right? And I'm just going to look at the out of the money, right? I don't want to spend a lot. I'm just going to look at the out of the money. And so for Facebook, I'd probably do like just about 10 contracts or something, and I'd buy the puts, right? And put in an order to sell 2 minutes before the market closes, right? Whatever the price is, just market order me out 2 minutes before the market closes. If I'm going to be around 2 minutes before the market closes, then I'll pull it right off and I'll go manually do it. But I always like to keep that in there just in case I'm distracted with something else, some other trade or something like that. But that's what I'll be looking for. So if Facebook decides to rally up a little bit and we get the stochastics up here above 80, stochastics drops below 80, well, that's when will look to get in. That's not going to happen in the next 5 minutes. It's not going to happen in the next 50 minutes. Maybe after that it could happen, but as it sits, it's not. It's not. We're not going to get bearish signals on these. Come into play here in the next few. Let's take a look at the SPY. Still no bullish signal on the 5-minute chart. Take a look here at the 1-minute chart. Still no bullish signal on it. We did get the move above 20. but with the rising Bollinger Band. And that's what almost every one of these rallies have been here this morning, right? They have been moves above 20, but with the rising Bollinger Band. And you'll notice that every one of these rallies has been sold into, at least so far. So I do want to wait until I get the better signal there. All right. Thanks for hopping on. Have yourselves a fantastic new year. Thanks for being with us here at Trader Minute. I will be back on with you here Thursday afternoon. We'll get the new challenge launched and started. It'll be it'll be a very interesting starting environment for it, being right at the beginning of the year, where a lot of these charts sit. So we'll go through that on Thursday. But excited for that, and looking forward to a great trading 2020. I wish you and your family the best, and we will talk to you later. Take care.